Hey, Bankless Nation. I'm excited to bring you my conversation with Leighton Cusack, who is the founder of PoolTogether. And for those that don't know, PoolTogether is a prize-linked no-loss lottery. And basically what that means is that when you come to PoolTogether, you come and deposit your stable coins, your crypto dollars, but also now DeFi tokens as well, or into the future, many more. But what it does is it's kind of like depositing your money into Compound or into AAVE, and you get a yield. But instead of getting your interest, the interest goes up for a lottery, right? So you actually don't get the interest unless you win. But if you win, you not only get your interest, but you get everyone's interest. And so it's a way to get outsized, high risk, outsized value capture of many people's yields, right? And so it's a little bit of a gamification, and it's a really interesting app. And just a number of weeks ago, they released the Pool token, which helps govern over the protocol. We go into all of these details and more in this episode with Leighton, this Meet the Nation episode. Before we do, though, we want to take a moment to talk about some of these fantastic sponsors that make this show possible. Bankless is proud to be supported by UNISWAP. UNISWAP is a new paradigm in asset exchange infrastructure. Instead of a cumbersome order book system where trades are matched with other humans, UNISWAP is an autonomous piece of software on Ethereum, which is what Ryan and I call a money robot. No human counterparties or centralized intermediaries, just autonomous code on Ethereum. Input the token you want to sell and receive the token you want to buy. Something brand new in the Uniswap ecosystem is the Uniswap Grants program is now accepting applications for grants. We have been saying this for a while and we'll say it again. DAOs have money and they are in need of labor. If you think that you have something to contribute to the Uniswap DAO, apply for a grant to Uniswap. Just look at the size of the Uniswap treasury. It's almost $3 billion. This mountain of capital is looking for labor. Do you have something of value to contribute to the Uniswap DAO? No matter how big or small your idea is, you can apply for a uni grant at unigrants.org and help steer Uniswap in the direction that you think it should go. That's exactly what we did to get Uniswap to be a sponsor for Bankless, and you can do the same for your project. Thank you, Uniswap, for sponsoring Bankless. Gemini is the world's most trusted cryptocurrency exchange. I've been a customer of Gemini since I first got into crypto in 2017, and it's been my main exchange of choice to make my crypto buys and sells. Gemini is available in all 50 states and in over 50 countries worldwide, and on Gemini there are markets for over 30 various different crypto assets, including many of the hot DeFi tokens, and it's one of the few exchanges that has liquid DAI markets. Gemini just launched their Earn program, where you can earn up to 7.4% interest on 26 various crypto assets. If you're tired of paying fees in DeFi, or you don't want to worry about DeFi exploits, but you still want to earn interest on your crypto assets, Gemini Earn is the product for you. Another product I'm stoked to get my hands on is the Gemini Crypto Back Credit Card, which gives you 3% cash back on all of your purchases, but paid to you in your preferred crypto asset. When I get my Gemini credit card, I'm going to make sure that I get my cash back in ETH. So whenever I buy something, I get a little bit of ETH bonus back to me at the same time. You can open up a free account in under 3 minutes at gemini.com/gobankless. And if you trade more than $100 within the first 30 days after sign up, you'll be gifted a free $15 Bitcoin bonus. Check them out at gemini.com/gobankless. All right, guys, I'm here with Leighton Cusack of PoolTogether. I actually met Leighton in person in Tel Aviv in 2019, I think. So one of the few people that I actually met in person before I met online. But now, as we all know, now there's very much an online world. And so good to see my good friend Leighton Cusack here. And Leighton, tell us about PoolTogether and how it came to be and also what it is.
Yeah, for sure. Well, thanks for having me. And yeah, like you said, it's funny because we've known each other for a long time. And, you know, I've done some stuff with Bankless. I wrote a newsletter for you guys about a year and a half ago. But it's funny because there's so many new people in DeFi now that we have people all the time who are like, hey, when are you guys going to go on Bankless? When are you going to do Bankless? And I thought maybe that means it's time for another round. So yeah, so PoolTogether, it's actually one of the oldest DeFi protocols. It was started about 2 years ago. And the basic idea is it's a protocol for on-chain prize savings, otherwise known as no-loss lotteries. And so it's a really cool concept. Basically, it's a savings account. You deposit your money. You can withdraw it whenever you want to. But while your money is deposited, all of the interest from everyone's money is essentially grouped together and then randomly distributed. And so basically you have a chance to win really large prizes as opposed to earning like a small amount of interest. So right now there's like $225 million deposited. That generates around like $200,000 a week in these no loss prizes that all you have to do to be eligible to win them is just deposit your money. So it's a really powerful concept. It's a really important financial primitive specifically for people who don't necessarily have a ton of money, right? Like if you're yield farming with $10 million, then maybe it makes sense to earn 10% APR on your money. But if you only have $10,000 or something like that, then it's much more compelling to have a chance to win like really large prizes than to just get incremental returns on your money.
The reason why I really like PoolTogether is that it's one part like psychological trick and one part really good, sound, responsible money management. Where like we know that the legacy lottery has product market fit. We know this because people keep on buying lottery tickets all the time. Yet we also know that the lottery as a financial investment, as a place to put your savings, is not the best thing to do. Mainly because the odds of you winning and the risk adjusted odds of you winning just don't play out in your favor. It's basically a tax on gambling. And the nice thing about PoolTogether is that you put in your money and you never ever lose your money. And so you will always get your money back, but it does satisfy people's degen sides, right? Like if they want to, try and like input $50 and receive back 50,000, PoolTogether can serve that need for you.
Right. Yeah. And that's the thing. There's a lot of people who need that financial tool. Right. And actually, so this is a fun little stat because our luckiest winner so far, they deposited $74 and they won $43,000. And so they deposited that money. They could have taken it out. It's not like buying a lottery ticket where you lose that money. Mathematically speaking, the key thing with like prize savings versus a lottery, a prize savings is always expected value positive. Mathematically speaking, using a lottery is always expected value negative. So what you're saying is totally correct. It basically takes the psychology of randomness and that being fun, and it also combines it with actually a healthy behavior, which is saving money, and puts those two things together. And so it's a lot of people are like, oh, this is a brand new idea. It's never been done before. And it is very well known in certain parts of the world, not so much in the United States, although it was only legalized in the United States in like 2014. So it's a fairly recent thing in the United States, but internationally it's very well known. And there's hundreds of billions of dollars in prize savings accounts all over the world. And so doing it on Ethereum obviously is just like 100 times better.
Right. Now we have the global digital version of that, which everyone could access, which is probably maybe you have some stats perhaps available where maybe you could compare PoolTogether versus historical prize link savings accounts. So do you have that off the top of your head by chance?
Well, I mean, I can tell you that we're just scratching the surface. So like just in the UK, right? The prize savings right now there's $100 billion deposited into prize savings accounts. And as I mentioned, there's like 225 million in PoolTogether. So we're not even at 1% of what prize savings are in just one country. So it's definitely a lot bigger. And, in the UK, $100 billion, they're paying out, $100 million a month in prizes. Obviously on Ethereum with higher capital efficiency, higher rates of return, that could be $1 billion a month in prizes, which would be pretty amazing. That's the community has kind of a big goal right now to get to 1 million in no loss prizes per week. And right now, as I mentioned, we're at about 200,000, 250,000, depending on interest rates. So we're almost there.
Yeah. In the world of crypto, the difference between 250,000 and 1 million actually doesn't really seem all that big. It's kind of weird.
Well, yeah. It's growing fast. It's coming quickly.
So Leighton, say I'm a new crypto user and I've just discovered that APYs on Ethereum are really, really awesome. And so I want to take my $20,000 in savings and I want to go and deposit into Compound to go get that yield. Pitch to me why I should instead perhaps deposit it into PoolTogether.
Yeah, for sure. Well, so a couple things. First is I probably would say do both. Like most people who use PoolTogether are also using Compound or AAVE. Most people who are using Compound or AAVE are also using PoolTogether. So it's not binary. But I think so there's two ways to look at it. You can look at it mathematically and say, look, if I have a certain deposit size, I actually mathematically am going to have a better return by going into Pool Together than by going into Compound directly. And we can talk a little bit about why that works with the sponsorship and the reserve, which is an idea that we talked about a while ago. Mm-hmm. But long story short, depositing in Pool Together has a higher expected return than using the underlying yield source directly. So you have a mathematical way you can look at it that way. The other way to look at it though is if you have $20,000, which is a sizable amount of money, and you're saying if you want to you want to split that in half and put 10,000 to Pool Together, that's going to give you a chance to win $100,000 every week. Versus, even at 10% APR, $10,000 is $1,000 a year. That's less than $100 a month. That's not really, for a lot of people, like earning an extra $100 a month isn't going to make a meaningful difference in their finances. But having a chance to win $100,000 every week for a year potentially makes a way more meaningful difference. And that's actually like a more important financial tool. So anyways, I guess I'm rambling, but like there's basically two ways you can kind of use it. You can certainly do like the math on it and actually get a better return, or you can just say like, hey, for me personally, having an extra small interest rate isn't going to make a meaningful difference. So I'm going for a life-changing amount of money.
Yeah, when people are seeing their like interest rates in their savings accounts or even in Compound, like they're not right. the interest rates that they're getting from Compound, they're not daydreaming about any like villa in some like exotic part of the world, right? But like if with their winnings from Pool Together, perhaps they actually could do that. But actually to me, what is interesting to me is the mathematical reason as to why it's actually on a risk adjusted level, why it's beneficial to, if you are ready to commit to Pool Together for the long term, it actually makes more sense as to why you should deposit into Pool Together. So why is it true that you can actually get a better return on investment with Pool Together over the long term?
Yeah, so there's a really interesting mechanism called the reserve. So basically what happens is a portion of every prize gets actually redeposited back into the prize pool. Mm-hmm. And what that does is then sits in there, contributes interest to the prizes, all future prizes, but it's not eligible to win. So like, for example, right now in the USDC prize pool, there's about $550,000 of this, what we call sponsorship. That basically is money that's sitting there that's eligible to win, but is not eligible to win and is contributing interest to the prize. And so what that does is it raises the effective APR because you have more money contributing interest to the prizes than there is eligible to win the prizes. And so that just keeps compounding week by week by week. So just like today, the USDC prize was awarded and like $60,000 was added to the reserve. And, next week it'll be like another $50,000 or $60,000. And so, you could do the math over the course of a year, that's going to be millions of dollars that's going in there. So it's a really cool perpetual growth mechanism that basically raises the yield to always be higher. On top of that, which we haven't actually talked about too, at least right now, all depositors into Pool Together are also receiving the Pool token, which governs the protocol. They get that for free as well. And so that's actually kind of changes the economics even more.
Right. So the reserve is it the reserve or the sponsor? Yeah, the reserve.
What we call it's the reserve rate. The reserve rate creates the sponsorship. Yeah.
Right. To me, that is like the magic perpetual motion of the Pool Together system, right? Because it basically guarantees that there should always be interested parties depositing DAI or USDC into Pool Together because it is rational over the long term. Because what this is like you guys have generated a money robot, a contract on Ethereum, which we don't have to reward. We don't have to reward that contract. And in fact, we can make it reward us. That contract rewards the participants. And so what's happening is that there is like, how much did you say? Like 1/3 of the DAI inside of a lottery is actually just part of the reserve. Or is that?
I was talking about the USDC prize pool. Oh, okay. And so like as of today, that has like a little over $500,000 in the reserve.
So it's like having like $500,000 of your competition not be relevant, right? Like all of a sudden your competition actually is just in your favor, right? And
Right.
so, and this is why when you can look at the compound APY and you can add on a percentage upon on top of that as well, proportional to the size of the reserve, because you know that that size of the reserve is actually your ally, not your enemy, when it comes to fighting over this lottery winnings.
Yeah. Yeah. And it, like you said, it's really cool because it's this perpetual growth machine and it runs on its own, which is amazing. Like it just keeps going. Like it will keep going forever, because even if every single person took their money out of PoolTogether, there would still be a prize, because they wouldn't take that reserve, would still be there. That would still be contributing interest. And so, so no one will, people will never take all their money out, because that would, it would be very economically irrational to do that.
Right. Because if everyone took all of their money out, then, and if no one was there, you could immediately receive free money by depositing $1 into PoolTogether and then claim all of the interest of the reserve, which is growing.
All the interest of like $550,000. Yeah. And now it's growing. Yeah. Which, in a few months, millions of dollars. So you would be effectively earning the interest on all that money. Yeah.
For free. Yeah. For free. How fast has that grown? What was the reserve size like just a few months ago?
Well, it's grown fast. So this is actually something that governance just activated, like literally a few weeks ago. And so right now across the protocol, it's growing a little over $100,000 a week. And so in most, that's in the stable coins, like the DAI and the USDC. So like I said, just today, the USDC grew by $64,000. And DAI is on track to grow by like $50,000 this week. So, let's just call it $100,000 a week right now. So we're looking at, $5 million a year.
That's really awesome. That's really awesome. So let's talk about the pool token. So where did the idea, talk about the genesis of the idea of the pool token, and also when did the pool token come about? It was sometime recently, right?
Yeah, it's very recent, and that's another thing, right? So PoolTogether has been around for a long time, but the token is only in the last like 12 weeks or so, probably less than 12 weeks, maybe 10 weeks. It's been a bit of a whirlwind, but from the beginning, we always had the plan to build a decentralized protocol that a lot of people could integrate with, and that PoolTogether Inc., the company, could then build on top of. And so this was always the plan, but we really wanted to work really hard to make sure that before we decentralized it, that we had, the security of the contracts was really solid. The audits were good, et cetera. We also wanted to make sure that the economics, like just the way the whole system works, made sense and was well balanced and all that. And so and make sure the protocol was built in such a way where it's very modular so that it could be easily plugged in. And so we took a long time to kind of get those things right. And when we felt like it was in a good place where it could sustain itself without us needing to contribute to it, that's when we decentralized with the pool token. And so that was about 12 weeks ago. And yeah, we did a large retroactive airdrop that went to everyone who had ever used the protocol, and additionally started an initial pool distribution to all depositors. So we really love this idea of user ownership, obviously. And I think it's really cool, this concept of like, if you deposit into PoolTogether, you automatically become an owner. And so that's how it works. If you deposit into any of the prize pools, you automatically immediately start getting the pool token. You don't have to do anything else. You don't have to do any staking or any like crazy stuff. And so, that's been a big catalyst for growth. You do have to claim it. Yes. But that's it. Yeah. But you just, any regular deposit will start earning the pool token. And so that's live right now.
That's even an additional reward on top of the already slightly juiced reward from the PoolTogether lottery. So you also are getting the token, right? And the token comes to you no matter what, just a very stable, or not stable, but like a weekly distribution rather than a lottery mechanism, right? There's no lottery mechanism for the winner.
Correct. Yeah. So I think like since we've launched the like effective like APR has been like in the 20 to 40% range on like the stablecoin pools for the last like 12 weeks. But as more capital goes in, that obviously kind of evens out.
And so in its current form, what does the pool token actually govern over?
Well, I mean, it controls the protocol. So basically, and that's sort of like an abstract way to say it, but there's sort of three main things. One is it controls the prize pool. So there's like this reserve rate I was talking about. It controls the reserves. It sets the reserve rate, how much of each prize should go back into the reserve. It controls the prize pools in terms of like how many winners are there per week, how often are prizes awarded. The governance can change those parameters. It also controls about half of the total pool token supply is undistributed, and it's under the control of the pool token holders. So the holders control future distributions of that, with the idea being that it should go to the people who are helping to build the protocol. So anyway, so I kind of said two things. The first thing is like it controls the existing no loss prize pools. It controls the further distribution of the pool token. And then it also controls new no loss prize pools. So there's a lot of new yield sources being integrated, new asset types, deploying on new networks, L2s. And so that's the other thing that the pool token holders also control.
And so where let's talk about the integrations there. If just to make sure we check that box, is where does yield actually come from for PoolTogether?
So the four no loss prize pools you see right now, if you go to the website, those are all Compound. They use Compound as yield source, but there's a lot of new yield sources that are being integrated right now. So AAVE actually is launching this week. So there'll be AAVE as a yield source. Yearn, Iron Finance integration is being audited right now. There's an integration with like X Sushi, so you can actually like the sushi staking mechanism. Basically, any yield source you can think of PoolTogether as a game, like a no loss gamification layer on top of yield generation. And so any yield source on Ethereum, whether it's Compound, AAVE, a staking one, Rari, there's all sorts of them. It can be integrated with any of those yield sources, so people can then create their own no loss prize pools using that yield source.
And so the reserve, there's one reserve for every single yield source as well, right? Or is it for every single asset?
It's for the reserve is set at the prize pool level. So each prize pool has its own reserve rate, and it's set, and that's how that works.
Okay, so there will be many, many different reserves that the pool token governs over all of them collectively.
Correct. Yeah. So that's actually kind of a cool thing too. So like right now, the primary no loss prize pools are DAI, USDC, Comp, and Uni. And so the reserve is accruing all of those tokens. It's accruing DAI, USDC, Comp, and Uni. It accrues whatever the native token being generated is. And so as like a sushi pool comes online, or Wrap Bitcoin, or an Ethereum pool, et cetera, the reserve is accruing all these different tokens. And so essentially, holding the pool token is you're holding all these different tokens.
Right. Okay. And so this is where I get really, really bullish, right? Because the reserve can be across many, many different yield sources, and also many, many different assets. And in theory, the pool token just governs over the growing pool, right? And the nice thing about PoolTogether in my mind is it's both actually a relatively simple app to build. And I say that as somebody who doesn't know how to code. Take that with a grain of salt. Right. But it's like a relatively simple app to build. And also, it's relatively simple to have some sort of evaluation on, because you can look on chain and see the growing pools, the growing reserves of many different asset types, and you can see how big they are and how fast they are growing. And to me, to evaluate PoolTogether would actually be relatively simple. It's a relatively simple calculation that is some sort of premium on top of aggregate yield inside of DeFi. And so, in theory, pool token owners, maybe they just want to call it quits one day and just like empty all the reserves. And like, I don't think this is ever going to happen, but this is a metaphor to illustrate why the pool token has value, is that the pool token owners could just like say, hey, like, I want to liquidate. I want my share of every single asset that has been accruing for the last like X years. And I just want them. And in theory, that is possible to do by pool token owners. And so the pool token is probably valuated by something, the net assets under management by the pool system, plus the future cash flows of the system, plus future growth. I think it's really cool.
Yes. Yeah, for sure. So, I mean, anyone who hangs out in our Discord knows that, especially as being someone who was involved in the creation of the project, I don't speculate on future valuations or anything like that.
But I do.
But you do. But in theory, you're correct. I mean, at the end of the day, the honest reality is the pool token holders do control this protocol. And, we've had 6 governance proposals at this point, and I still haven't even voted in any of them. And so, which is a great thing. And so, yeah, and in theory, all this is possible. And there's something else I wanted to say about that. Oh, well, I do certainly think I view it sort of like an endowment where the idea is that, the governance could also say, like, let's say once these reserves get to 10 million or 20 million, the governance could also say, like, oh, let's actually allocate these into different protocols, or allocate these into, like, do other things to generate yield with them, and then bring that back to create the no loss savings prizes. But there's a lot of interesting things you can do with once you have like a large amount of capital that's sort of just there to generate yield.
Right. I can't remember who said this line. I think it was like Chris Berniski, but like at maturity, all DeFi apps turns into on-chain like VC funds or not hedge funds, right?
Yeah, it kind of is true. I mean, that's kind of what Yearn is for sure. Right. And it's actually interesting with Yearn too, because like Yearn deposits into PoolTogether, but then PoolTogether also uses Yearn as a yield source, or is going to use Yearn with this integration. And so there's there's definitely an interesting I think that's pretty true.
Yeah. Yeah. So what else does PoolTogether have in its roadmap? What do you guys have lined up next?
Well, I mean, there's a lot of people working on a lot of different things. I'm privileged to be, I definitely get to hear about them. So one thing that I wanted to mention, because it's launching today, which I'm super excited about, is DHARMA. The DHARMA app, which some of your viewers probably have heard of. It's a really awesome app. Basically makes it really easy to go from your bank account into DeFi. They're launching a direct integration, so you can deposit directly from your bank account into PoolTogether for people who are in the United States. And so that's something I'm really, really excited about. So everyone should download the DHARMA app and try it out. And that sort of fits into like broad categories. I would say the main things that people are working on in the ecosystem right now is like integrations that make it easier to get into, easier to deposit, and or cheaper to deposit. Gas fees are obviously a huge problem. So there's a lot of people who are working on like DHARMA is an example of that. There's also this thing called Pods, which is launching. Another really cool thing where basically it groups people's tickets together, which lowers gas costs to deposit, but also lets them split the prize if they win. So basically anyone can become a whale, which is kind of cool. So that's on the front end. Those are some of the big things. And then on the back end, it's mostly integration into new yield sources, launching new prize pools with new asset types, and deploying to new like layer 2s. So those are sort of the main things going on.
Right. And those on-ramps are critically important, right? Because just aligned with PoolTogether simplicity is like, all you have to do is deposit. Like that's basically the only thing you have to do. And when we were talking earlier about the magnitude of prize link savings accounts, like elsewhere in the legacy world, like that's massive. And all we need to do to help export the strong premiums that PoolTogether is offering comparative to those things is by building off ramps, right? So we can get more capital into PoolTogether. I think DHARMA is going to be the thing that satisfies the demand of retail season in my mind. I think retail season is coming, and retail is going to expect a user experience that is comparable to what they are coming from, which is things like Robinhood or their brokerage. And I haven't found any other application other than DHARMA that offers that sort of experience. So I'm perhaps very optimistic about like cash flows into PoolTogether just coming from DHARMA.
Yeah. I mean, it's definitely a different. It won't. It's not the whales. It's going to be more the mass adoption. But I think like you said, PoolTogether is very simple, and so I think it is an ideal on-ramp for new people into DeFi, for like a first DeFi protocol to try out, because you don't have to you can put in $100 and it still makes sense. And so I'm really, really excited for the DHARMA integration.
Ding. That was a nice pun that you just made. I don't know if you caught that one.
Did I? I don't think I did.
You put in $100 and it still makes sense.
Yeah. Okay. Now I get it. You're thinking faster than I am. But yeah, anyways, Agreed that retail is definitely coming, and I am so happy to be able to get to a place where I can tell my friends and family, like, hey, you can actually just do this one thing and you don't have to jump through 100 hoops.
Hey guys, I hope you're enjoying the interview with Leighton so far. We get into the subject of pods and how pods allow users of PoolTogether to pick their own risk spectrum, which Leighton calls the reward spectrum. Really, it lets you, do you want to put in a little bit of money and have a very low chance of receiving a lot of money? Or do you want to put in a little money amongst a big group of people and have a very high chance of receiving a much lower amount of money? Pods are super cool. We also talk about L2s and also future innovations coming out of the PoolTogether app. So don't go anywhere. We have so much more to talk about in this interview. But first, we're going to talk about some of these fantastic sponsors that make this show possible. AAVE is a borrowing and lending protocol on Ethereum and just recently released AAVE version 2, which has a ton of cool new features that makes using AAVE even more powerful. With AAVE, you can leverage the full power of DeFi money Legos, yield, and composability all in one application. On AAVE, there are a ton of assets that you can deposit in order to gain yield, and all of those same assets can also be borrowed from the protocol if you have deposited collateral. Here you can see me getting a 200 USDC loan against my portfolio of a number of different DeFi tokens and ETH. I'll choose a variable interest rate because it's a lower rate than the stable interest rate option, but I could choose the stable interest rate option if I wanted to lock that interest rate in permanently. One of AAVE's V2 features is the ability to swap collateral without having to withdraw your assets, trade them on UNISWAP, and then deposit them back into AAVE. AAVE does all of this for you all in one seamless transaction, so you don't have to repay loans in order to change the collateral you have backing them. Check out the power of AAVE at aave.com. That's AAVE.com. Balancer is DeFi's most powerful automated market maker. Typical AMMs just have 2 tokens inside of one liquidity pool, which can lead to fractured liquidity across the many pairs in DeFi. With Balancer, you can access the full power of multiple tokens inside of one single AMM, which unlocks an entirely new playing field of possibility. This makes Balancer an awesome building block for so many different use cases. Balancer pools can make asset indexes, but instead of paying fees to portfolio managers, Balancer lets you collect fees from traders who use your portfolio for liquidity. Additionally, Balancer smart pools can be programmed to have properties that change according to predetermined rules, such as changing the swap fee based on market conditions, or even liquidity bootstrapping pools, which can help you launch and distribute your token with day one liquidity. At Bankless, we used a liquidity bootstrapping pool to sell our BAP t-shirts to much success. Balancer V2 brings powerful new features that makes your money work even harder for you. In V2, idle tokens are capable of generating yield in DeFi without sacrificing liquidity in the pool. To top things off, Balancer is reimbursing all gas costs with BAL rewards, meaning that all your gas costs are returned to your wallet with the Balancer governance token. Balancer's mission is to become the primary source of liquidity in DeFi by providing the most flexible and powerful platform for asset management and decentralized exchange. Dive into the Balancer pools at pools.balancer.exchange. Let's go into the pods a little bit more. I got a chat with me and some college buddies, and we all like to play around in DeFi. Say we wanted to pool our money together. How would we use pods to get that done?
Yeah, so pod serves 2 functions. Like I said, one is it batches deposits, which is lowers transaction costs. So it lowers transaction costs to deposit by about like 80%. But the other function, which is really fun, is basically if you deposit into a pod and any of the deposits in that pod win, that prize is automatically split among all the people who are deposited. So if you and your friends wanted, so say, you know, a lot of people say like, oh, I feel like I don't really have a chance to win. I only have $1,000. So what you can do is you can say, oh, get with 10 of your friends. Or if you want to be more aggressive, you could say get with like 1,000 of your friends, and then you'll have $1 million. And then you'll have a way higher chance to win. Obviously, the prize relatively will be smaller, but that actually also gets really interesting too when we think about the interest return being higher than the underlying asset, because then you could really, like hypothetically, if everyone was in one pod, you would just be earning an interest rate that's higher than the underlying yield source. It's just distributed, not every second, but instead like once a week. And so there's a lot of interesting things there, but yeah, that's the idea of pods. So I'm really excited about that. I think it introduces like a cool social dimension to it too. And those should also be going live this week too. There's been a developer, Kames, who's been working on that. And he's been working for several weeks, and I think he's almost done.
To me, the cool thing about pods is that it allows depositors to really choose their risk spectrum, right? So they say, like what you just said, like, well, if they have money in every single pod, well, then they are just aggregating they are just getting an aggregate of all pooled together yield everywhere, and so there's actually no risk, right? Because they are receiving all dividends anywhere from anywhere, or they are just doing a solo, which is like you're one pod, just a pod of one, and you're taking maximum risk where like you are highly likely to receive nothing, but perhaps in a very unlikely scenario, able to receive a lot. And pods kind of let you go through the whole gamut of that full range, depending on how many pods and what sizes of pods you want to get into.
Yeah. Yeah. And I love that. And I say it's a reward spectrum, right? Because there's I would like to say there's no risk, right? Because regardless, you're not losing your money, but you can essentially choose the return profile you want. Do you want a return profile that basically offers exponential returns on your deposit, but with a low probability? Or do you want a return profile that offers slightly higher than normal yield with a high probability? And you can basically just choose your own adventure on what you want.
Do you have any opinions or ideas as to who is really going to use pods first, or what type of maybe other DeFi apps or cohorts of individuals that would really find pods useful?
I mean, I think gas prices have definitely priced out a lot of people who want to use PoolTogether. And like we can see that reflected in our stats. There's a 100% correlation between gas costs and number of deposits. And so I think the first big market is people who are in DeFi who want to use PoolTogether, but don't have $1 million, you know, or even $10,000. Maybe they have, you know, and PoolTogether is very popular in like China is the #2 country for traffic to PoolTogether. South America is really popular as well. And so there's a lot, I think the main target audience right now is basically people who are in DeFi, but just they're priced out because of gas. And this will be helping them have a way to get access to a better yield.
Is there a layer 2 conversation to be had with PoolTogether?
Yeah, well, we're already deployed on we're deployed on Polygon, and that's going to be launching with integrations to the AAVE deployment on Polygon, and so that will also be obviously lower transaction costs. Planning to use Optimism when that launches. So the basic strategy is sort of like deploy it on all of the EVM compatible blockchains out there.
And then see which one. I'm assuming not all of them will stick and some of them will stick, and that'll just be how the cards settle. Right.
Yeah. Let people, make sure it's there for people to use. And I think, right now, though, I think Polygon's gotten a lot of traction, especially with this new AAVE campaign. And, there's a lot of excitement for Optimism. But there's a lot of great stuff. I'm feeling good about let's call it scalability summer.
I was just going to call it DeFi summer round 2, but I do like scalability summer. That does roll off the tongue.
I would like DeFi summer round 2 as well. Either way, those both sound fun.
Leighton, is there any future thing coming out of PoolTogether that we haven't yet talked about, or did we just cover all the bases?
That's a good question. I think we've covered most of the bases. Like I said, there's so many people working on different aspects now. It's really cool. Now, like I mentioned, we're not even working on the pods. Like someone else is doing that, and DHARMA's doing the app. And so I'm sure there's other stuff that I don't even know about that's being done. Which is the beauty once you decentralize a protocol, that you have more people working on it. But I think that's the main thing. And I think we covered the big points.
Do you have people in the PoolTogether, like PoolTogether Discord, trying to find each other to make a pod together? Have you seen that?
We haven't seen that yet. I think we'll probably see that when it officially launches, because it's officially.
Oh, that's right. Like, it hasn't launched yet.
Just one pod. But then people are free to obviously create their own. And so it'll be curious. I'm very curious to see how it plays out. Like, do we end up with one really big one, or do we end up with 100 small ones?
Right.
It will probably be somewhat aggregated because of because gas costs.
Sure. I'm excited to see how people use pods in ways that we can't really think of right now, because I would imagine that there are a bunch of, because really to me, a pod is just like it's another version of like a DAO. It's like a PoolTogether DAO that's dedicated for PoolTogether only. Like there's something there that I don't know what it could be, but some creative minds I think could really take that into a very interesting logical conclusion.
Right. Yeah, for sure. I mean, there's been a lot of people have been interested in like winnings that go to nonprofits or things like that. And so you could do that too, where it's like, okay, set up a pod, and then like if it wins, all the money's given away. Stuff like that is also, I think, really interesting. No lost donations.
Right. Yes. Here's one thing that we haven't actually talked about. What is PLDAI?
PLDAI. Well, okay. It's basically your tokenized. When you deposit into PoolTogether, you get back a token that represents your deposit, and it trades. It's obviously 1-to-1 to DAI because it's no loss, and so it's actually the ticker technically is now PTDAI. It was PLDAI previously.
Oh, now it's PTDAI.
PTDAI, yeah. But so PTDAI is your tokenized balance in PoolTogether. So you can transfer that or do whatever you want.
Is that fungible with other people's PTDAI? Because how do we claim? Okay, so how does the winnings work with PTDAI?
The winnings are actually they're sent to you, literally. So like if you win, your wallet balance will just go up that day.
Okay. And PTDAI is transferable, right?
Right.
So if I transfer the PTDAI, then how do I get the winnings? Because I've given away my deposit.
So are you talking about with a pod?
No. I'm just so like say I come in, I deposit 100 DAI, and I get 100 PT DAI back, and then I send that PT DAI to my friend. Right. Who has the claim on the deposits? My friend does, right?
Your friend does. Yeah.
Right. And so and so my friend now say that the deposits win the lottery, but now my friend gets the winnings, right? Whoever I sent that PT DAI to.
Right.
And so how does he or she,
your friend would get that money? Yes.
How is the winnings actually associated with specific PT DAI out there if all the PT DAI out there is fungible? Or is it just to the Ethereum address that holds PT DAI? Is that how the lottery winners make it?
Right. So when you transfer, if you transfer that PT DAI, when doing that transfer will update the eligibility structure in the protocol to say this address now holds this deposit. And so when the winner is chosen, which is done, it's done using the random number generated by Chainlink. When the winner is chosen using that random number generated by Chainlink, if the number of the index falls on that deposit, that's how the protocol knows who to award the accrued interest to. And it's awarded, it's literally, it transfers the action of awarding the prize. That transaction actually sends that out to all the people who won. Okay.
So what if I have my PT DAI collateralized inside of MakerDAO? And then if you guys sent the winnings there, I wouldn't be able to go get that.
Right. So that's actually a very good observation. And that is like a problem to be solved, really. And that's part of what actually Pods does, though, is Pods is a solution to that, because Pods operates in a different way where if the pod wins, the exchange rate changes and your balance stays the same. And so that's actually fully fungible in that sense. Whereas the PT DAI, you're right. That's why you don't really want to deposit it on Uniswap, because Uniswap would win if those won. And so there are a few things that we're looking at in terms of you could be able to wrap them or things like that to be able to get use them as collateral. But that's definitely an outstanding problem to be solved.
Yeah, perhaps a call to the community to help solve such a problem.
For sure. Well, I mean, I sent a tweet out a little while ago. I was like, if anyone can figure this out, they'll immediately have $200 million of deposits on their platform, right? Because there's so many people who have deposits in PoolTogether, and right now they're not using that as collateral anywhere. And so that's definitely a call to the community to say, hey, if you can figure this out, you can get a lot of deposits.
Right. Yeah. The more and more capital efficient that PoolTogether becomes, the more capital will be deposited there. Right. Really, really interesting.
Right.
Leighton, this is PoolTogether has always been one of my favorite DeFi apps. So thank you for coming on Bankless Meet the Nation to tell us all about it. If any Bankless listener wants to know more about PoolTogether, where should they go?
Best place, go to our website, and there you can link to our Discord. That's definitely the best place. We have a really awesome community. Many people have said it's the nicest community in DeFi. Hopefully that's true.
Ooh, big words.
But I don't know. We'll see. There's a lot of nice communities in DeFi, but Anyways, yeah, I would say Discord is like the best place. And follow Pool Together. There's a couple different accounts on Twitter that the community run, and so it would be awesome to stay in touch that way too.
Cool. And if you have ever used Pool Together before and you have not claimed the airdrop, definitely go do that, because there's a Pool Together airdrop for you.
Yes, that's a great point. Yeah, and start participating in governance. It's a very active governance. So it'd be awesome to do that.
Awesome, Leighton. Well, thanks for coming on at Bankless. If people want to find out more about you specifically, where should they go? Do you have a Twitter account? I believe you do.
I do. It's Leighton, 2,000 pounds, LAY 2000 LBS. So that's kind of the play on words there. So yeah, you can definitely reach out. And then obviously I'm on Discord all the time too. So if you pop in our Discord, feel free to DM me or just message me. And I'm definitely happy to chat.
Awesome. And all those links will be in the show notes. All right. Thanks everyone for tuning in to this Bankless and Meet the Nation. Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.